G'day everyone, welcome back to Pete's Investing, June 16, 2023. This is the high grade copper price analysis. On our weekly, we're broken up into a neutral. The daily is broken up into a bullish scenario, likewise on the hourly. Looking at each of these. So on the weekly, first off, we've the triple moving average and the moving average of the price chart are not aligned, so it's actually broken up from a bearish signal to a neutral positioning. So hold off going long or short at the moment. On the daily, you can see there it has broken up into a bullish, but we need to see the weekly break into a bullish as well to be more confident on the lower time frames. And I've got here a Fibonacci retracement. You can see there it's now reaching the 61% level, which is always a key area to look out for a potential reversal, or if it breaks through the 61%, then we're looking at further upside and most likely approaching this descending trend line. So just avoid long or short positions at the moment. If you want to be a bit more cautious on the hourly trades. It did break through this minor resistance we drew at 38,372. So that's a positive in terms of bullishness. So let's see what it's doing on the hourly. Now on the hourly we did have, I know it's a bit of a colourful wonderland here, but I did have this bearish scenario, this bearish divergence on the CCI versus a bullish divergence on the price chart. And these generally work. If this price was to break below that channel, that would have been our target. Now, because the CCI corrected and then moved up, and the price remained within that channel and kept going up, you can see there we're going to consider this trade, this bearish trade, as not started. So it hasn't actually started. So there's no great harm. In other words, you wouldn't have entered the trade. So no problem there. What we're going to do, let me just get rid of these. So we're going to remove that Fibonacci, and remove that channel and that trend line. So what we're looking at now, let's get rid of this as well. We're looking at potentially a new divergence. You can see here the CCI is still trending down with the price still trending up. So we're going to map a new potential bearish divergence. And this basically means we're expecting the price to break to the downside and hit our target. So how do we determine that? So what we first do is we draw a channel in that divergence range and bring it down to the lowest candle within that range. And then we pick a Fibonacci range, and we go back to, you can either pick that one or that one, not a huge difference in that way we do it. Let's go for that recent low to that current high. So we're going to aim for a potential target if it breaks to the downside. You can see there that sort of correlates with this previous resistance line. So if it does break to the downside from here and break below that, then we're going to set a target at the next level Fibonacci range, which would be that 38% to the 50% level. And that's how you would execute that. And we did actually have if we go back to this one here, we did actually have a bullish divergence here. The CCI was trending up, whereas the price chart was trending down. It broke above our channel here, so that would have been your entry, and that would have been your closest target. You can see there it broke between that first level Fibonacci level on this one here, this Fibonacci range, and it went higher than the 61%. So you would have actually, it's now currently in the 1, 2, 3rd area of a target range, but they don't always go that aggressively. That's why I tend to be a bit more conservative and choose the closest Fibonacci range as the target area. So you would have gone above your entry point and hit your first target area in this first rectangle. So that's where we are currently on this latest bearish divergence. So we may see a bit of a downside possibly. Of course, there's no guarantee, but if it does break below this channel, that's where you enter short and aim for a target area there. Also at the top level here, we've got a back test, a bullish back test and a bearish back test. And again, to trade those, you only trade in the direction when the weekly and the daily and the hourly are aligned. You take those trades long or short. So to understand how to trade this and other trading strategies, reference the links in the description below. Subscribe to my Patreon page where we also scan for weekly stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.